X, Y, and Z are the three partners in a firm of which Z is non-working partner. Z is non-working partner. This is important. And working partners are X and Y. X and Y are the working partners. Z is a non-working partner. They share profits and losses in the ratio of 3:1. The following is the profit and loss account of the firm for the year ending 31st March 2021. P&L account is given to you people. In the P&L account debit side, there are certain expenses, credit side incomes, and net loss is there. So in this problem, there is a loss, net loss of 30,000. 30,000 loss is there. 30,000 loss is there. So you have to solve this problem very carefully. You take this 30,000 loss as net loss as per P&L account. Net loss as per P&L account is 30,000 you take. Then add disallowed expenses. First disallowed expenses, rent. Rent to partner. Rent to partner is allowable. Establishment expense is allowable. Establishment expense and rent, these two are allowable. Rent paid to partner is allowable. Whenever this rent is the rent given to partner at a reasonable rate. Whenever it is at reasonable rate, it is allowable. Otherwise, no. We consider this rent as a reasonable rent and allow it. Next is salary to partner, it is disallowed. Thereafter, interest on capital 14%. Interest on capital 14% is there. Out of this 14%, 2% excess is taxable. That is disallowed. So 14,000 into 2 by 14 you calculate. I think it is 2,000. It is 2,000. Interest on capital disallowed is 2,000. Professional tax is allowable. Professional tax is required for running the profession. Business is also considered as one profession. Therefore, to run your business, professional tax is a business expense. So it is considered as allowable expense, professional tax. The next is income tax is disallowed. Income tax disallowed. Provision for income tax disallowed. Then loss on sale of machinery is not related to business. It is related with capital gain. Then next is depreciation is allowable. You see the adjustment and take your decision. Thereafter, establishing the expense include commission to Z 10,000. Commission to Z 10,000. Then furniture purchase 2,000. These two are disallowed. Okay, establishment expense is allowable, but these two included in that amount. So these two amounts disallowed. You disallow these two amounts. One is commission to Z, another is purchase of furniture. Machinery which is sold during the year for 10,000. Machinery sale value is 10,000. Written down value is 15,000. Written down value 15,000. So this is the short-term capital loss. You take full value of consideration and deduct the written down value. Depreciation allowable as per rules is 8,000. You already charged in the P&L account 8,000. 8,000 depreciation shown in the P&L account, allowable is also 8,000. Therefore, whatever shown in the P&L account, that is the allowable. Same, both are same. Therefore, no disallowable, no additional allowable. no disallowable depreciation, no additional depreciation. Remember this. Compute the total income. So you take disallowed, thereafter deduct the credit side items. First is interest on bank FD, second is interest on government security. If you deduct these two, you will get the income from business, book profit. In the book profit, you deduct working partner remuneration. Working partner remuneration. Thereafter, whatever balance remains, that is the business income. And after business income, you calculate capital loss. 5,000 is the capital loss. You capital gain calculate. Then you calculate other source. Other source. Okay. In this way, you calculate. You see the simple calculation here. First, you take the net loss. Net loss is 30,000. You see the right side margin I am writing here. You take 30,000. And disallowed. First disallowed is 60,000. 60,000 is the salary disallowed. Okay. Next disallowed is interest on capital. Interest on capital is 2,000. That is 14,000 into 2 by 14. Then professional tax allowable, income tax you take 10,000. Thereafter, provision for income tax 10,000. Loss on sale of machinery 5,000. Okay. Come to your adjustment. First adjustment is, this is the commission. Commission disallowed 10,000. Furniture purchase 2,000. This is the point connected with capital loss. The depreciation allowable 8,000, 8,000 same. No difference. If you take the total of this, I think it is 99,000. Minus 30,000 is the loss, plus 30,000 is the addition, plus 99,000. Plus 99,000 is the addition. If you take the ultimate result of this, I think it is 69,000 plus. 69,000 plus comes. And in this, you deduct the credit side item. One is interest on FD, another is interest on government security. So interest on FD 1,000, interest on government security 9,000. You deduct 10,000. If you deduct 10,000, your answer 59,000 is called as book profit. 59,000 is called as book profit. Okay. Book profit. This 59,000 is called as book profit. In this book profit, you have to deduct working partner remuneration. Working partner remuneration is, working partners are X and Y. Amount paid to X and Y is 60,000. First, you calculate as per 40B. According to 40B, 90% of book profit or rupees 1,50,000, whichever is more. You take 1,50,000 according to 40B. Actual remuneration is 40 plus 20. Salary paid to partners, 60,000. 60,000 is the lesser amount. You deduct 60,000. You deduct 60,000. 1,50,000 as per 40B. 60,000 is the actual remuneration. Out of these two, 60,000 is less, goes to outer column. Then business loss. Whatever answer minus 1,000 comes, this is the business loss. Business loss. Okay, business loss. And I'll write here. Next head is, it is the business loss. You write business loss. Business loss minus 1,000. Okay. Then you calculate the capital loss. Capital loss is you take the full value of consideration. Full value of consideration is sale value. Sale value is 10,000. Written down value less written down value 15,000. So there is a capital loss. Short-term capital loss 5,000. That will not be adjusted. You carry forward that loss to next year. And thereafter you take the other source. Third head is other source. In the other source, first is interest on FD 1,000. Second is interest on government security 9,000. 10,000 is the income from other source. Okay. So 10,000 is income from other source. Capital business loss is 1,000. According to section 71, you set off business loss from the other source 10,000. Then your ultimate income is 9,000. Okay. GTI is 9,000. This is the gross total income. GTI. Gross total income is 9,000. In this gross total income, you deduct the deductions. There is no deductions under section ATG and others. So this ATG 9,000 itself is called as total income. Total income. Your book answer are wrong at the unregistered form ಅಂತ calculate ಮಾಡಿದ. Unregistered form ಅಂದ್ರೆ ಇದು answer change ಬರ್ತತಿ. ಅದಕ್ಕ business ಅನ್ನ ನೀವು according to section 184 ಪ್ರಕಾರ ನಾವು calculate ಮಾಡಬೇಕು. So this answer is also wrong in the book. You can check your answer, and if there is any changes, you tell me. Okay, this is the question number 20. You solve this problem. You solve this problem in your book. Clear? Now you see the question number 21. In this question number 21, sun, moon, and star. Sun, moon, and star are equal partners, sharing profits and losses. Equal partners in a firm of which star is not a working partner. Star is not a working partner. You remember this. Star is not a working partner. Then working partners are sun and moon. Sun and moon. Okay. Now you take the net profit as per P&L account. Net profit as per P&L account is 20,000. You take 20,000 NP. Add disallowed expenses. Salary is allowable, rent is allowable, traveling expense allowable, advertisement allowable. Reserve for bad debt is disallowed. Remember this. Reserve for bad debt is disallowed. Depreciation allowable, fire insurance allowable, salary to partners disallowed. Salary to partners disallowed. Sun and moon is disallowed. 28,000 salary disallowed. Then commission to partners. Commission to sun and moon, this is also disallowed. Interest on capital. Total 12,000 is there. And this interest is at 16%. Out of 16%, 12% is allowable. Remaining 4% is disallowed. So you calculate disallowed interest. 12,000 into excess rate 4% divided by total rate 16%. 12,000 into 4 by 16, I think it is 3,000. ಇದ್ರಾಗಿನ 3,000 ರೂಪಾಯಿ disallowed ಆಗ್ತೈತಿ. Okay. Loss of stock by theft. Loss of stock by theft. Stock of goods is lost, and the explanation is not in this heading. Nothing is mentioned here. And you consider that as a loss during the business hour. Loss during the business hour in the business premise, and that stock is allowable expense. ಸ್ಟಾಕ್ ಹಾಳಾಗೈತಿ, ಎಲ್ಲಿ ಆಗೈತಿ ಅಂತ ಹೇಳಿಲ್ಲ, ನಾವು ಯಾವಾಗ ಆಗೈತಿ ಹೇಳಿಲ್ಲ. ಸ್ಟಾಕ್ ಅಂದ್ರೆ ಅಂಗಡಿಯಾಗಿನ ಸಾಮಾನು ಹೋಗಿದಾವ್. ಅಂಗಡಿಯಾಗಿನ ಸಾಮಾನು ಹೋಗಿದಾವ್ ಅಂದ್ರ ಅದು ಬಿಸ್ನೆಸ್ ಅವರ್ದಾಗ ಆಗಿರ್ತೈತಿ. ಬಿಸ್ನೆಸ್ ಅವರ್ದಾಗ ಇರ್ತೈತಿ, ಬಿಸ್ನೆಸ್ ಪ್ರಿಮೈಸ್ ದಾಗ ಆಗಿರ್ತೈತಿ. ಅದಕ್ಕೆ ಅದು ಅಲೌಯಬಲ್. ಅವ್ ಏನ್ರೆ ಬೇರೆ ಹೇಳಿದಂದ್ರೆ ಮತ್ತೆ ಡಿಸ್ಅಲೌ ಆಗ್ತೈತಿ. ನಾನು ನಿಮ್ಗೆ ಈಗಾಗಲೇ ಒಂದು ಹೇಳಿದ್ದೀನಿ, ಲಾಸ್ ಆಫ್ ಕ್ಯಾಶ್ ಹೇಳಿದ್ದೀನಿ. ಲಾಸ್ ಆಫ್ ಕ್ಯಾಶ್ ಡ್ಯೂರಿಂಗ್ ಆಫೀಸ್ ಅವರ್ ಇನ್ ದಿ ಆಫೀಸ್ ಪ್ರಿಮೈಸ್ ಅಲೌಯಬಲ್ ಅಂತ ಹೇಳಿ. ಹೊರಗಡೆ ಆದದ್ದು ಬೇರೆ ಆದದ್ದು ಡಿಸ್ಅಲೌ ಮಾಡಂತೇಳಿ. ಅದೇ ರೀತಿ ಇದು ಸ್ಟಾಕ್ ಎಲ್ಲಿ ಹಾಳಾಗೈತಿ ಹೇಳಿಲ್ಲ, ಲಾಸ್ ಆಗೈತಿ, ಅದನ್ನ ನಾವ್ ಏನ್ ಮಾಡ್ತೀವಿ, ಸ್ಟಾಕ್ ಅಂದ್ರ ಅಂಗಡಿಯಾಗಿನ ಸಾಮಾನ, ಅದ್ ಅಂಗಡಿಯಾಗ ಇರ್ತೈತಿ. ಯಾವಾಗ ತುಡುವಾಗಿರ್ತಾವ ಅಂತ ಕೇಳಿದ್ರ ವ್ಯಾಪಾರ ಮಾಡೋದ್ನಾಗ ತುಡುವಾಗಿದಾವ ಅಂದ್ರಿ ಅದು ಅಲೌಯಬಲ್. ಇಲ್ಲ ರಾತ್ರಿ ಕೀಲಿ ಹಾಕೊಂಡ್ ಮನಿಗ್ ಹೋದಂತ ತುಡುವಾಗಿದಾವ ಅಂದ್ರಿ ಡಿಸ್ಅಲೌ. ಸರಿ ನೆನ್ಪಿಡು. So this is considered as in the office premise during the office hours. So 1000 is allowable. Payment to retiring partners. It is not a related to business expense. It is a capital expenditure. So it is disallowed. Okay. Come to adjustment. Depreciation allowable is 6000. In your P&L account, you shown 8000. So out of 8000, 6000 is allowable. Remaining 2000 is disallowed. Depreciation 2000 is disallowed. 2000 to be disallowed. Okay. Then rent include 2000 being rent of godown owned by Star. The fair rental value of the building is 1800. 1800 is the fair rent, but rent given is 2000. So excess rent is paid. That excess rent paid is disallowed. Out of 2000, 200 rupees is disallowed. Remember this. Salary includes 6000 being salary paid to daughter of Star. She is a BCom graduate. ಇದನ್ನ ಅಲೌ ಮಾಡ್ತೀರೋ ಇಲ್ಲೋ ನೀವು ಜನರಲ್ ಆಗಿ ವಿಚಾರ ಮಾಡಿದ್ರೆ ಗೊತ್ತಾಗ್ತದೆ. ಯಾರಿಗೆ ಕೊಟ್ಟಿದ್ರಿ ಸ್ಯಾಲ್ರಿ? ಪಾರ್ಟ್ನರ್ ಮಗಳಿಗೆ ಕೊಟ್ಟಿದ್ದೀರಿ. ಪಾರ್ಟ್ನರ್ ಮಗಳಿಗೆ ಸ್ಯಾಲ್ರಿ ಕೊಟ್ಟಿದ್ದೀರಿ, ಆಕೆ ಬಿಕಾಮ್ ಗ್ರಾಜುಯೇಟ್ ಆಗ್ಯಾದಂದ್ರ ಮತ್ತ ನೀವು ಯಾರಿಗಾದ್ರೂ ಪಗಾರ ಕೊಡಬೇಕು. ठीक है, ಬೇರೆದವ್ರ ನೌಕರಿ ತಗೊಂಡ್ರು ಅವ್ರಿಗೆ ಪಗಾರ ಕೊಡಬೇಕಾಗ್ತೈತಿ. ಅದಕ್ಕ ಪಾರ್ಟ್ನರ್ ಮಗಳಿಗೆ ಕೊಟ್ಟಿದ ಪಗಾರ ಅಲೌಯಬಲ್. ಇದು ಸರಿಯಾಗಿ ನೆನಪಿಟ್ಕೋರಿ, ರೀಸನೇಬಲ್ ಇರ್ಬೇಕಾದ ಕೊಟ್ಟಿದ ಪಗಾರ. ಮತ್ ಪಾರ್ಟ್ನರ್ ಮಗಳದ ತಿಳ್ಕೊಂಡು ಜಾಸ್ತಿ ಪಗಾರ ಕೊಟ್ಟಿದ್ರಿ ಅಂದ್ರ ಡಿಸ್ಅಲೌ ಆಗ್ತತಿ. ರಿಮೆಂಬರ್ ದಿಸ್. ಇಫ್ ದಿ ಸ್ಯಾಲರಿ ಗಿವನ್ ಟು ದಿ partners family members, salary given to partners family member is allowable only when that is reasonable one. Remember this. So we consider that as a reasonable because she become graduate, 6000 is reasonable. No doubt. Traveling expenses are paid to Moon for his foreign tour. Traveling expense paid to the partner Moon for foreign tour. To secure order to the firm. To secure order to the firm means it is a business expense. ಅವ್ನು ಮಜಾ ಮಾಡಕ್ ಹೋದಾಗ ನೀವು ಕೊಟ್ಟಿದ್ರಿ ಅಂದ್ರೆ ಡಿಸ್ಅಲೌ. ಸರಿ ನೆನ್ಪಿಟ್ಕೊಂಡು. ಅವ್ನು ಫಾರಿನ್ ತನ್ನ ವೈಯಕ್ತಿಕ ಮಜಾ ಮಾಡಕ್ ಹೋಗಿ ಟ್ರಾವೆಲಿಂಗ್ ಎಕ್ಸ್ಪೆನ್ಸ್ ಇಲ್ಲಿ ಹಾಕಿದ್ದಂದ್ರೆ ಡಿಸ್ಅಲೌ. ಆದ್ರ ಅವ್ನು ಆರ್ಡರ್ ಪಡಿಸಲೋಗಿಲ್ಲ. ಟು ಸೆಕ್ಯೂರ್ ಆರ್ಡರ್ ಇನ್ ದಿ ಫಾರಿನ್, he traveled to foreign country, therefore it is allowable. It is related to business. Okay, like this you take the expense, thereafter you deduct the credit side item. Credit side item, first is discount related to business, bad debt recovered, previously allowed. Previously allowed is there, so it is not considered. Idun togobed. Disallowed idre matra togori, athwa previously taxed, previously disallowed are considered. Allowed is not considered. Remember this. Under credit side yavu barudilla. Okay. So you calculate the income from business and There is no other item of donation, etc. You see the solution. You see the solution. Computation of total income for the assessment year. First is net profit as per P&L account 20,000. Add disallowed expenses. Commission to partner 12,000. Salary to partner 28,000. Interest on capital 12,000 interest is there, 16%. So 4% disallowed. 12,000 into 4 by 16, 3,000. RDD, doubtful debt is there, 3,000. Rent to partner, 2,000 rent paid. Out of that 2,000, 1,800 is reasonable. Excess is disallowed, that is 200. Depreciation 8,000 charge, allowable is 6,000. So disallowed is 2,000. Okay. Retiring partners share, 2,000 is capital expense. You take this, then take the total. Total is, I think, 70,200. 70,200. In this 70,200, you deduct other head incomes. There is nothing. So, same answer comes. Book profit. In the book profit, you deduct working partner remuneration. Working partner remuneration. Working partner remuneration, first point is according to 40B. According to 40B, 70,200 into 90% or 1,50,000, whichever is more. Whichever is more, first point, 1,50,000. And second point is 60% on balance. Balance is not there. So next point, you take actual remuneration. Actual remuneration paid to the partner is 40,000. 40,000 is the actual remuneration paid to the partner. That is commission 12,000, salary 28,000. Salary 28,000. Okay. So total amount paid to the working partners is whichever is less. Out of these two, whichever is less is allowable. 40,000 is working partner remuneration. You deduct 40,000, balance is 30,200. 30,200 is called as income from business. Income from business. Okay. So income from business is 30,200. And nothing is there. Mat bere yadu illa hedda adikista answer agtade. And this is the GTI. This is GTI. And this is the total income. Total income is the GTI is the business income is the. Okay. This is the question number 21 completed. Now you see the question number 22. Question number 22. In this question number 22, X, Y, and Z are partners. X, Y, and Z are partners in a firm, out of which X and Y are the working partners. X and Y are the working partners. X and Y are working partner. Then Z is non-working partner. Okay. P&L account is here. In this P&L account, first point you take net profit as per P&L account. Net profit as per P&L account is, your P&L account net profit is 30,000. You take 30,000. Add disallowed expenses. What are the disallowed expenses? Establishment expenses allowable. Okay. Rent to partner Z is allowable. It is reasonable one. Partner salary 75,000 disallowed. Partner salary disallowed. Interest on capital 14%. Out of that 2% disallowed. So 14,000 into 2 by 14 is disallowed. Profession tax allowable. Next is income tax. Income tax disallowed. Bad debt allowable. Provision for bad debt disallowed. Loss on sale of machinery disallowed. Depreciation you check. Donation disallowed. Okay. Come to the adjustment. Commission to the partner disallowed. Furniture purchase disallowed. Depreciation allowable as per rules is 7,000. You see here. Depreciation shown in the P&L account is 10,000. Out of 10,000, 7,000 allowable. So remaining 3,000 disallowed. So 3,000 disallowed. Then donation is paid to National Foundation for Communal Harmony. This is the deduction item. So 100% qualify, 100% deduction. 100% qualify, 100% deduction. Remember this. Then machinery sold during the year 20,000, written down value 25,000. So full value of consideration 20,000, written down value 25,000, 5,000 is short-term capital loss. Okay. Debit side item completed. Credit side bad debt recovered. Previously disallowed. You take to calculation. It comes under less head. Interest on non-listed debenture. Net is there. Non-listed debenture interest is not related to business. Therefore, it comes under less item. And you have to calculate income from other source. Okay. Ist ಮಾಡಿದ್ರೆ ಆನ್ಸರ್ ಬರ್ತದ. ಈಗ ನೋಡಿ ಸೊಲ್ಯೂಷನ್ ಇಷ್ಟು ಕೂಡಿಸಿ ಇಷ್ಟು ಕಳೀರಿ. ಇದ್ರಾಗ ಇರ್ತಕ್ಕಂಥ ಇನ್ಕಮ್ ಎರಡೇ ಇದಾವ. ಒಂದು ಬಿಸ್ನೆಸ್ ಐತಿ, ಇನ್ನೊಂದು ಅದರ್ ಸೋರ್ಸ್ ಐತಿ. ಈ ಅದರ್ ಸೋರ್ಸ್ ಮಾತ್ರ ಗ್ರಾಸ್ ಅಪ್ ಮಾಡಿ ತಗೋಬೇಕು. ಇಲ್ಲಿ ಲೆಸ್ ಮಾಡೋದು ಡೈರೆಕ್ಟ್. ಮತ್ತೆ ಇಲ್ಲಿ ಯಾರೇ ಗ್ರಾಸ್ ಅಪ್ ಮಾಡಿದ್ರೆ ಬಿಸ್ನೆಸ್ ದಾಗ. In the business, you directly deduct two items, 1,000, 9,000. These two comes under less and disallowed comes under the add. Now you see the solution. Net profit as per P&L account is 30,000. Add disallowed expenses. Partner salary 75,000. Interest on capital 14,000 into 2 by 14, 2,000. Income tax disallowed. RDD disallowed. Loss on sale of machinery disallowed. Donation disallowed. Commission to partners disallowed. Depreciation 10,000 minus 7,000. 10,000 P&L account ಹಾಕಿದ್ರಿ. Adjustment as 7,000 is disallowed. Then furniture purchase 5,000 disallowed. You take the total. Total is I think 1,70,000. Is 1,70,000 total ಆಗ್ತದೆ. Check ಮಾಡಿ. Then less other head income. First is bad debt previously taxed or disallowed 1,000. Interest on non-listed debenture 9,000. So credit side item only 2. You take the total 10,000. You deduct 10,000. Book profit is 1,60,000. Book profit 1,60,000. Okay. You take this book profit to the next stage. Book profit 1,60,000 less working partner remuneration. Under working partner remuneration, first you calculate according to 40B. On first 3 lakh rupee, 90%, or 1,50,000, whichever is more. So on 1,60,000, 90%, or rupees 1,50,000, whichever is more. So 1,50,000 is more. That comes as per 40B. Then actual remuneration paid to the working partner in this problem is 75,000 salary to the partners. X and Y. Z is non-working partner. 75,000. Whichever is less is the allowable. 75,000 is allowable. Okay, so 75,000 allowable. You deduct 75,000. Balance is 85,000. Okay, 85,000 is called as income from business. Income from business. The next state is capital gain. In the capital gain, you take full value of consideration. Full value of consideration means sale value. Sale value is 20,000. Less written down value. Written down value of that asset is 25,000. If you deduct 25,000, your answer is minus 5,000. 5,000 is the difference. This 5,000 is called as short-term capital loss. Short-term capital loss. So short-term capital loss. And there is no other short-term capital gain or long-term capital gain. Therefore, this short-term capital gain will be carried forward to next assessment year. Next assessment year. Clear? The next date is other source. In the other source, there is only one item, that is interest on non-listed debenture. Listed debenture is gross up model. Non-listed gross up model. Interest on listed debenture is 9,000 is the amount into 100 by 90. 100 by 90. I forget to take here. To write 100 by 90. 10 by miss agi 10 So you take 100 by 90. 100 by 90. That income is 10,000. Okay, 9,000 into 100 by 90 gross of 10,000. Then income from other sources 10,000. Okay, capital loss goes to next year. Now you take the total. Total is 95,000. Okay, 95,000 total is called as gross total income. In this gross total income, you give deduction. You give deduction. The deduction is 80G. 80G. That is the first category. 100% qualify, 100% deduction amount. Communal harmony as all hearing note. Central government. 80G. 10,000 is the amount donated. This comes under first category. 100% qualify, 100% deduction. So you deduct 10,000. If you deduct 10,000, your total income is 85,000. Your total income is 85,000.